Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar edged higher to around 98.2, but it remains close to its lowest level since early October as markets digest the Federal Reserve's December meeting minutes. The minutes show that most Fed officials are inclined toward further rate cuts next year if inflation continues to cool, reinforcing expectations for a more accommodative policy stance. Overall, the dollar is down nearly 9.6% this year, marking its steepest annual decline since 2017. WTI crude is trading near $57.8 as oil prices move higher at the start of the week. Fresh uncertainty in the Russia-Ukraine conflict, combined with escalating tensions in Yemen, has raised concerns over Middle East supply risks and lifted the market's risk premium. After last week's sharp sell-off, prices rebounded from the 54.88 low, attracting renewed buying interest. Structurally, the recovery found solid support at the key 50% retracement level around 56.86, which successfully halted the previous decline and triggered the rebound. Gold climbed back above $4,350 on Tuesday. Monday's sell-off marked the metal's largest daily decline since October and its second major one-day drop this year. Despite the pullback, gold's appeal as a safe haven asset remains strong amid persistent geopolitical uncertainty. Peace talks between Russia and Ukraine face renewed doubts following reports that President Putin may reassess Moscow's negotiating stance. Meanwhile, former President Trump warned of further action against Iran if nuclear activity continues and confirmed US strikes on a drug-related facility in Venezuela. Yen reversed lower in the final trading week of the year, retreating toward the 156 area and giving back last week's bullish momentum. Volatility is expected to pick up into year-end and early 2026 as thinner holiday liquidity amplifies price swings. While the yen has not yet reached levels that would force immediate intervention, the risk of direct action from Japanese authorities remains on the table. Japan's finance minister reiterated last week that the government has full flexibility to respond to excessive currency moves. At the start of the week, the euro extended its pullback against the US dollar, marking a third consecutive session of declines. Last week, the pair briefly pushed above the 1.18 level to a fresh short-term high before clear profit-taking emerged. Policy expectations remain a key driver, with attention on the Fed's December minutes, while the European Central Bank's relatively cautious stance continues to offer some medium-term support for the euro.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.